Okay, guys, good evening. Just a very quick forecasting session. I've got a few prior commitments tomorrow, so I don't think I'll be able to squeeze it in tomorrow. So I thought I'd just get it out of the way today. Um, Tagging on from where we were last week's forecast, obviously we came into this week 21st, expecting the market to sell down and then buy up out of these zones to kind of continue a move to target liquidity on the higher time frame. As we saw, it was kind of pulling and coming out of what we recognize as being a higher time frame demand zone, which is on the weekly candle way back here. We saw the market come in, as we said before, tap into this weekly candle a couple of weeks ago, and then started to show rejection out of that candle. So effectively, this was the move that we were anticipating to move out of this zone and then kind of move out and possibly take liquidity lying above us, because bearing in mind it's coming out of a weekly demand candle. This is the break of structure which took out all of these highs previously. It took out all of the liquidity that was lying here in the fair value gaps. It tapped up into the supply, took an inefficient wick, hasn't mitigated it fully, and actually rejected from that zone back down to where the push was originated. So we were expecting a rally from this area back up into areas of higher time frame supply above us to then fully mitigate to possibly then sell down. Now, obviously, that hasn't materialized. We've ended up on the week with an indecision candle, which shows that the bullish momentum we were expecting out of this zone either has not been tapped into as yet, because as we can see, 50% of the candle has not yet been taken. So what we may be anticipating now is for this move to be negated. We're looking for the market to now show us what it decides to do. This is an indecision candle. The market is indecisive as to which direction it wants to take. So we're going to try and see whether we get rejection out of 50% of the wick above this. So effectively this zone here, 988. We want to see rejection out of this, then continue deeper into this demand zone to then see if it kind of buys out of this or breaks the demand zone completely. So that to me is the probe trend move that we're looking for at the moment. So we're looking for a test up into the inefficiency of this wick to then possibly show us a continuation for sells into this area and then target this demand below. We will then see what happens here, whether we get a momentum move to the upside to then obviously push further out of this, or we get a push to the opposite side where the market consolidates, breaks low, and then continues to take sells. So again, initial bias and then two projected outcomes. Again, we will see what happens. We've got rejection to the upside. And then if we look down on the daily, we can see that the market's already come in, sold out of this supply into the demand, rejected out of the demand, tapped into the fair value gap that was left behind here. So this was what we were targeting, and caught a beautiful intraday trade on this, 1 to 36 down, and then kind of close off the market because I knew that the remaining 2 days were going to be a consolidating factor. Didn't want to really hold these trades into next week, but it could well turn out to be a very good sell position that we entered at this point here, which could be held long term down into these zones, but we can always catch those as the move kind of materializes early part of next week. We want to see how Asia opens. We want to see how the market moves up into this zone on Monday, whether this zone that gets rejected out of to then confirm sales for the remainder of the week, or we come into here, we consolidate, we accumulate, and then we move further up to then target areas of inefficiency above, which is obviously again this fair value gap on the daily, and then we have plenty of liquidity lying above us as well at this point, where we've got an accumulation of orders here which sold down. There's obviously a whole bunch of liquidity there to be targeted. As always, we will see exactly how the market opens, see what the trend on the higher time frame and lower time frame depicts, and then work out analysis down from top down to see where we kind of then end up on the lower time frame. 1 hour and 15 minute for our structural bias, and then entries usually on the 2-minute chart, to be honest with you. But again, as I said, we will see what happens early part of the week, and then decide what trades we're going to get in on. Either it's going to be a buy position out of this zone to continue higher and possibly hold one long to see if it goes further up, or when we get confirmation of rejection from this zone again, we're going to get in on sells and hold the positions down to here, interim, and then long term to take out this weekly demand and sell further down. Hope that makes sense. As always, questions, answers, and comments in the YouTube channel or Instagram, direct message me, and I'll be more than happy to fill you in on exactly why I've said what I've said and what the analysis is behind this. I will possibly be putting up a video that I had with a few friends just to run through the previous week. It wasn't the greatest of weeks because I was actually busy for half of the week until Wednesday. I took a blinding trade on Wednesday, as I said, 1 to 35, 1 to 38 we cleared, and that was me done for the week because I didn't really want to then trade within a consolidating market. I had taken what I needed for the week on that one day, and we will now go again next week. Okay, take care, guys. As always, trade safe. Make sure you do analysis, back testing, research, forecasting, and prepare for the week ahead. If you fail to plan, you plan to fail. Okay, speak soon. Take care. Enjoy your week, rest of the weekend. Bye bye.